Hey everyone, Catch 'em all collectibles here. Today I have a different kind of video that I've teased a couple times. You can see here I prepared a little presentation for it. Usually I record my videos with very little to no preparation and just go off the cuff, but this one I wanted to have some notes prepared for to make sure I hit all my points. And so I figured instead of looking at me full screen, you can have a little slideshow to follow along if you care to here. So shout out to Ernesto, Skate Ernesto. He made this little thumbnail when I told him I was going to be making a video about investing in Pokemon. So yeah, the usual disclaimers up front. I am not a financial advisor. I'm not a CPA. I'm literally just some guy on YouTube talking about children's playing cards, trading cards, and this is all for entertainment purposes only. So now that we've got that out of the way, just some quick definitions, both courtesy of Investopedia. Investment is an asset or item acquired with the goal of generating income or appreciation. And then speculation refers to the act of conducting a financial transaction that has substantial risk of losing value, but also holds the expectation of a significant gain. So anybody familiar with my content and they're aware that I've just strayed away from using the I word, the investment word, when it comes to Pokemon. And some people will say it's semantics. I'm just nitpicking. Very well, may well be the case, but as with the remainder of this YouTube, these are all my opinions, and I'm just sharing them with you for whatever value or entertainment they may bring you. So to me, I really like speculation a lot more when it comes to buying and selling Pokemon with intent to profit. Long term, like where some people would use investment, I would just say that speculation is the more appropriate word. And I'll get into that a little bit as we go further, but I just wanted to lay up front. I wanted to lay out like the definitions between the two and get that out there. And depending on where you look, I found them on Investopedia. You can find different definitions, obviously, as with anything else. And maybe somebody defines it where it's more appropriate, one or the other. Little bit of backstory on why I made this video. Nick and I do the podcast every 2 weeks. Very commonly, should I buy X or Y with $1,000? What's the best investment that I can buy? I've got X amount of dollars, Y years time frame I'm looking to invest to make the most money. So that's part of it. Another common theme, not just with people in the Pokemon hobby, but very much that. Also, just a lot of people my age range. I'm 31. Old coworkers, friends, family members. I've seen and heard a lot of people talking about, oh, the stock market's too risky, I'll rather buy Pokemon cards. Oh, the stock market's too risky, it's like a casino, I'll buy Dogecoin instead. So that's just something that I always cringe a little bit when I hear it, and I see and feel that sentiment too in the Pokemon sphere. Not from everybody, just it's out there, and that's again another reason I'm addressing this. Another thing that I've seen and experienced a lot too, selling on eBay, just getting questions on Instagram or YouTube, whatever may be the case, buying from some of these people. But a lot of the investors, with air quotes, that I come across seem like they don't have a big exit plan. They've never sold potentially. That they have an eBay where they've a couple hundred transactions of buying only, no idea how to sell, no idea where they'd sell. And also, if and when they go to sell, 1099s are something they're unaware of how to work with them, and they just don't have any of the foundation to prepare them to sell if and when the time were to come. So yeah, those are all the reasons that I'm making this video. And again, just to kind of share some insight, hopefully this is interesting or useful to some people. So this slide, I'm going to get into my thoughts on traditional investments. Like when I use the word investment, I've got some of these things over my shoulder too. No, I'm not investing in baby wipes or soda or paint, but each one of these things represents like a company. Coca-Cola, Mountain Dew is made by Pepsi, Sherwin-Williams, Huggies is made by Kimberly-Clark, Dawn is made by Procter & Gamble, as well as Crest, Hormel, you've got McCormick, Johnson & Johnson. All these companies are able to be transacted in large quantities. They're very liquid and very scalable. I can buy literally millions of dollars. Well, I can't personally because I don't have that much to invest, but any of these companies that are represented by these products, people can transact and do transact in the order of tens of millions, if not hundreds of millions or billions of dollars daily, monthly, annually. And there's a ton of diverse options. This is just a handful of essential goods that I found around my house that a lot of people watching this video, if you go through your house, you're likely buying products from companies that I would deem great investments every day. I mean, when you go to McDonald's, when you go to Walmart to get your groceries, when you go every day, you're spending some amount of money, and that's going to a company, many of which are publicly traded, and you have the opportunity to invest in if you care to. Not everything. I mean, a lot of things are privately held. PSA in our own hobby, they used to be publicly traded under Collectors Universe, but now they've been bought out and they've been taken private. So like, if you wanted to invest in Pokemon that way by investing in one of the underlying companies in the hobby, PSA isn't available, but like Nintendo is. Nintendo is on, I don't know what the exchange is, but it's a Japanese company that you could invest in. Another thing I like about traditional investments, I'm very much a novice when it comes to traditional investing. I enjoy it a lot though. I'm passionate about personal finance. I think it's something that's very important to everybody. I mean, no matter how much you might dislike it, money is important. I mean, money doesn't buy happiness, but transacting intelligently with money and managing money intelligently, having enough of it can certainly do good things for you to prevent unhappiness at the minimum. So I like that in traditional investments, I can simply hop in with weekly, monthly, quarterly, whatever frequency I want. I can buy passive index funds and beat industry professionals. I mean, there's so much data out there. There's so many studies done on how just dollar cost averaging month after month, paycheck after paycheck into passive index funds beats, I don't know the exact numbers. I mean, you can look it up, but it beats the average industry professional by far, the S&P 500, some index like that. And there's a lot of data out there supporting that. Another thing I like when you look at a company like Coca-Cola, I'm a big value investor guy, Charlie Munger, Warren Buffett. Coca-Cola is a company that generates real tangible goods. Buying a share of Coca-Cola, you're buying a productive asset. It has an intrinsic value and a price floor. When you buy a Pokemon card, you're buying a collectible that has value to you and me, but there's really no price floor. One thing that I hear a lot in the hobby is intrinsic value. I get it to an extent. I understand how certain cards have more value and more fundamentals than others. But in my opinion, Pokemon cards have zero intrinsic value. And I think it's strange when people use it. When you look at Coca-Cola, you can objectively value their cash flow, their assets, their PP&E, plants. No, I can't even think now. Property, plants and equipment. There's tangible things there, and a lot of them have balance sheets that you can look at through their 10K filings, their annual 10K filings for stockholders. There's a floor value. I mean, Coca-Cola has billions of dollars of cash on hand. They cannot go below some floor value because someone like Warren Buffett, I mean, he does own a lot of Coca-Cola, but Berkshire Hathaway would step in and buy the rest of Coca-Cola if it were to get to too low of a number, because at some point the number gets so low that they're selling enough Coke to make that amount of profit in 12 months, or they've got that much cash on hand. Look at Apple, look at how much cash they have on their balance sheet. So there is an intrinsic value in traditional investments. Same goes for like real estate too. I'm largely talking to stocks. I don't really invest in real estate. There are REITs, REITs that you can invest in without like holding individual properties, but you can also invest in individual properties, rent them out, things like that. Not something I'm really into, but they're out there. So something like that has an intrinsic value. There's some amount of construction costs. There's a way you can value what's there. Another positive for traditional investments, tax efficiency. Tax efficiency is very big in the world of finance. I am one who utilizes heavily 401ks and IRAs to defer taxes into the future. 1031 exchanges and depreciation, they're more on the real estate side. I just included them there because there's a lot of tax efficient methods that you can transact in traditional investments that just aren't afforded to the collectible space. Another thing, getting back into what I mentioned before, like people thinking the stock market's gambling and kind of just shunning traditional investing as a whole because it's like a casino. In my opinion, it's not remotely. When you invest in something like the S&P 500 fund, you're literally investing in the combined effort and productivity of 25 million employees globally. And there's a $20 trillion market cap among the S&P 500. That is the largest 500 publicly traded companies by market cap. So when you're investing in the stock market, when you're investing in the S&P 500, you're betting on human innovation and advancement. Every day, 25 million people are waking up and going to work, and the amount of money you put into the S&P 500, you're buying that fractional amount of those 25 million people's output and productivity. So yeah, I think that's a really important thing to keep the context of. I did mention here volatility. So stocks over the past 20 years, 11 of those 20 years, there's been a drop of more than 10% in value in the S&P 500. And then obviously 2000, 2008, going back into the 70s, obviously the Great Depression, way back, we've got a 150-year time frame for traditional investments to look at. And at times those things can be as high as 40%. But one thing that's really important to keep in mind, especially in the type of investing that I like to do, like each one of these companies, I didn't really mention it before, but each one of these companies represented back here by these products, they're what's called a Dividend Aristocrat. So these companies, I think there's 66 of them now in the S&P 500, 25 straight years, they've increased their dividend year over year. So a dividend is the amount of money that monthly, quarterly, annually that is paid back from the profits to the shareholders. So say you own one $100 share of some random company that has a 3% dividend. They'll pay you on your $100 investment, they'll pay you $3 back annually as your share of the profits. I think overall the S&P 500 has something like a 1 to 1.5% dividend yield as a whole. So if you own $1 million worth of the S&P 500, you'll get $10,000 to $15,000 a year handed back to you in dividends annually. So if and when the stock market were to drop 10%, 40%, companies like this, so Coca-Cola, at one given point in 2008, it might have been $100. I don't know what Coca-Cola trades for exactly right now. I don't own any of these stocks individually, but it might have been trading at $100. Well, one month later, you wake up, the stock market's just crashed. Well, now it's trading at $60. In spite of that, these companies, the Dividend Aristocrats, they did not decrease their dividend. So if you had a 3% dividend yield when it was $100, well, now doing the math, you're down to 60. It's still a $3 payment. You're at a 5% dividend yield now. So those companies, and keep the context of over the past 25 years, we're in 2022 now. So that encompasses the .com bubble, and that encompasses the 2008 crash, as well as the Corona crash, flash crash of 2020. So those companies, in spite of all those massive events, still generated profits, still sold the products they sell, and still return to investors those annual dividends year over year, increasing, beating inflation oftentimes. So the last line here, I did want to put a little bit of context. I'm kind of giving you my thoughts on the way that I invest. And I do have to state and recognize the fact that there is a lot of ways to gamble and heavily speculate in traditional investments like the stock market, penny stocks, day trading, options trading. I don't do any of that personally, but it is out there. So a lot of the things I'm talking about are just pertaining to the way that I transact in there. I mean, the same things go on in Pokemon too. A lot more riskier ways to play it with leverage and all that. But that was a long slide. Getting on to the next one. My thoughts on Pokemon, the way that I interact with it, why I interact with it. It's fun. It's nostalgic. Some of these companies, I've got them sitting in my 401ks and IRAs. It's boring. Pokemon is fun. I mean, I don't have much more to say there. It's fun, exciting, nostalgic. Another thing, experts can excel and beat the market. So in the prior slide, I mentioned, I like that I could be a novice and I could just do better than most experts on average. Here in Pokemon, it could be considered a pro, it could be considered a con, but someone with a lot of experience and knowledge. I'm not trying to call myself an expert here, but I do have a fair bit of experience and knowledge. I have some expertise. Would I say I'm an expert? I don't like to say that, but if you know what you're doing, and if you have, again, knowledge and experience, you can beat the market. You're not always going to, but it's like anything else. If you make a lot of bets and you have a decent win rate, you're going to come out ahead in the long term over a large pool of those bets, some of them panning out, some not, but the average moving you ahead. On a similar note too, like the lack of liquidity and fungibility, it could be considered a pro and a con. In my eyes, the way that I transact, it's very much pro to me. So lack of liquidity, if you're the one needing to sell now instantly because you're in debt, because you need it to fund living expenses, it's very much a con, because you're going to have to sell to someone, likely a reseller, who's got the capital ready to deploy it. I mean, you might have to sell something for 30 to 50% of its market value. That's an abstract concept that doesn't really have a singular number, but yeah, lack of liquidity plays into the hands of people that are patient and have capital, have liquid capital ready to buy when opportunities arise, and it doesn't really work well for people who need to like quickly exit. Another thing too that is a consideration, like kind of against Pokemon as an investment, there's a lot of risks, a lot more risk than people realize. And there's a lot of cost in storing and insuring. With stocks, it's all stored digitally. It's all ones and zeros in a computer somewhere. With Pokemon, it takes up a lot of space. Getting back into like if you're trying to do this at large scale, it's difficult. One, because it's, I mean, $1 million or something is a lot of money to plow into Pokemon all at once. You're going to move the prices on any individual things if you're trying to move a lot into one thing. And then another thing is you got to put it somewhere. You got to put it somewhere. Theft, fire, flood, anything like that. I think a lot of people just kind of YOLO it. They have no kind of insurance whatsoever. I utilize a few different methods of insurance that I kind of intend to do a video on at some point down the line. But offsite storage, PWCC vault, something like that, safe deposit boxes in a bank. There are different insurers out there that will insure collections, but generally speaking, renters insurance policies or homeowners insurance policies have very low limits, like $500 or $1,000 for collectibles oftentimes. So that's something you should really look into if you've got a 5, 6, 7-figure collection in your house and completely uninsured. I mean, yeah, theft, fire, flood, those are things that happened. Another thing with Pokemon, I did mention the volatility of the stock market. Relatively speaking, though, Pokemon is much more volatile. That's just objective fact. And it's a lot more speculative too. Again, you can speculate very substantially in the traditional stock market, but again, I'm comparing the way that I invest in the stock market to the way that I transact in Pokemon. Part of the reason I gotta quit clicking. Part of the reason that I say it's speculative too is when I buy a share of Coca-Cola, I don't need to sell that down the line to make money from it. Every day, every month, every year, it's spitting out dividends. It's a productive asset that's like paying me as I go for holding it. Whereas Pokemon, I'm paying to hold it. Or if I'm not paying to hold it, insurance, storage, there's some amount of cost in that. If you've got 300 square foot of your house devoted to storing Pokemon, some amount of your rent, some amount of your property taxes, some amount of that is devoted to that space. So there are like hidden costs there. However you're storing it, wherever you're storing it, there's some amount of cost or risk associated with it. And with Coca-Cola, the price on paper could go down a bunch. And again, I'm still getting that dividend. With Pokemon, any one of these cards, the only way I'm going to make money in it is to sell it to someone down the line for more than I paid for it. I'm capable of doing that, and I'm confident in doing that. I do that full time as a business. But at the end of the day, like, it's a luxury good that I need somebody to buy from me down the line. And I put a note in here, something I talked about a little bit on Wednesday and something I harp on continually. When I sold $500 to $1,000 Pikachus and Eevees, when I sold $6,000, $7,000 PSA 9 unlimited Charizards, I sold a lot of those to investors. They bought thinking they were going to sell for more down the line. On a long enough timeline, humanity is still going to, hopefully, humanity is still going to exist. People are still going to consume essential goods. People are going to have to wash their dishes and their hair and their babies. People are going to paint their houses. People are going to drink, consume beverages and food. People might not always want to buy Pokemon cards. I like to think, I mean, it's been around 25 years. I like to think that I'm going to live a long, full life to 80 to 100 years. And I like to think Pokemon's going to outlive me, but it might not. It's not a given that someone is always going to be there down the line willing to pay more. Every year they're printing more cards, billions more. And of those 3-4 billion cards they print a year, most cards are worth the most they're ever going to be worth the day they come out. That was true back in 1999. I mean, a majority of those first 5 to 10 billion cards they printed are nearly worthless. I mean, a lot of them are in landfills. A lot of them are worth less than the 30 to 40 cents per card that you pay on a pack price. And that's going to be true into the future too. Yeah, that's kind of my thoughts on Pokemon. A lot of pros, a lot of cons to it, but at the end of the day, to me, investments, real estate, stocks, bonds, speculation, the stuff I do with MetaZoo, the stuff I do with Pokemon, the very minimal stuff I do with like crypto and NFTs. And then kind of, this is like I think this is my last slide. Yeah. So conclusion, wrapping it all up, bringing it all home. The whole point of this is just transparency. The whole point of my channel, I don't try to tell you how to invest. I don't tell you what to buy. I show you what I buy and I talk about why I buy it. The whole don't give a man a fish, teach a man to fish. That's the goal of this channel. And I'm not saying I have all the answers. These are my opinions. at the bottom, not financial advice. I'm just some guy on YouTube, but I'm just trying to show you my rationale, what I think, why I think it. And that's all this video was. It was me addressing, I think, the overuse of the investment word in this space. And I think the overuse of financial terms like intrinsic value and things like that. You always need to keep in mind the opportunity cost of all this, because it's not guaranteed by any means, but 150-year history of 7 to 10% after inflation investment gains per year. And just bring it all home. Pokemon, I do this full time. This is my business. So I do daily active business and speculate, underlined. I use the word speculate. Short and long term in cardboard. I've got some cards over here. Some on the top that aren't the greatest, some coming down that aren't listed anywhere. I'm a fan of them as a collector, as a businessman, as a speculator, not an investor, but as a speculator. I speculate that some of these items are going to go up higher than they are now. That's why I'm not looking to sell them currently. If and when the day comes that I deem them unworthy of their current market rate, or I deem the long-term prospects of their future value unfavorable to me, I'll look to sell them. But as for now, like I do context in all of this, there are a lot of good plays in Pokemon. There's a lot of value in Pokemon every single day. I'm constantly buying stuff. A lot of this could be seen fairly negative, me kind of being too negative on the long-term prospects of Pokemon and not being investable. But full disclosure, like I have a lot of Pokemon cards. I have a very strong vested interest in Pokemon growing over the long term. And I think it will. I quit my job to do business in Pokemon. So, and then saying all that too, I get in a way why people use the word invest. Going back to our first slide, going back to our early slide, an investment is an asset acquired with the goal of generating income. It doesn't cover that part, but appreciation. So if you buy a card thinking or intending for it to go up, be more expensive, to sell it to someone for more money down the line, I understand why people use the word investing with that. I just don't like to personally. And these are the reasons why. So going back 8 years, 2014, when I got back into the hobby, I had no financial incentive. I didn't think I was going to be doing this full time. I wasn't investing. I got back into the hobby solely to collect, but I went back in with $5,000, and $5,000 was like a finite amount of money. Pokemon offers a near infinite amount of things to buy. There's so many promos, so many variants, so many sets. I'm learning new things every day. So from day one of my main goals was to get the most value I could every time I bought something. And then that turned into flipping some things to make money, buying a big collection, keeping what I like, selling it off. It turned into everything I have today, that initial $5,000 investment and thousands of hours I poured into this. So yeah, just providing context. Like I've never been an investor in Pokemon. I do business in Pokemon. I speculate in Pokemon, and I collect Pokemon because I enjoy it. But for context too, I passively invest every day, every month, every year in proven assets with a long time frame. So Pokemon, 50 years from now, I'm not going to own nearly as much as I own. Maybe in dollar value, I'll own more, but it'll be in a handful of cards. It'll be in the something that can fit in the size of a briefcase is what I'm thinking down the line. Whereas when I invest in traditional investments, that is for the long term. I'm going to hopefully pass them on when I pass. My time frame is 50 years, 70 years, if I'm lucky. So, and I mentioned earlier the Dividend Aristocrats over my shoulder. Two of the main index funds that I invest in are VOO, which is a Vanguard product. Again, not financial advice. I'm not telling you to invest in these, but just as with this channel, full transparency. Full transparency. I have no hidden agendas, no trying to show you what biases I may or may not have. Just I'm going to lay it all out there, take it for what it's worth. VT Sachs is like a total stock market index fund, and that's like a world component. Even the S&P 500, there's a big world component. Coca-Cola sells all over the world. So even though it's a US based company, it has a global component to it. But yeah, every year I'm maxing my 401ks and IRAs because the tax benefits are just massive. The amount of additional wealth you can create over a lifetime properly managing your money from a tax perspective is massive. So that's everything. That's all I've got. I have no idea how long this just went. I wasn't paying attention to a clock. This was intended to be like a 15 to 20 minute video. I'm probably way over that, but like a introductory type thing. Again, personal finance, I mentioned earlier, is like a passion of mine, kind of a hobby. I'm really interested in investing in the stock market and all that. I don't think too much of it's applicable on this channel. I've had the thought that maybe someday I'll do some kind of a finance podcast or a finance YouTube channel, but I don't know if that'll ever happen. I'm really interested to hear your feedback. Anyone who stuck around this long, let me know in the comments below if you want to see any more videos of this sort. I'll have to think if I can make anything tying in Pokemon to it, but for now, this is what I was after. I'm interested to see the response. I appreciate you all watching. And at the end of the day, do what's right for you. If you want to invest in Pokemon, be careful. I think there's good opportunities in Pokemon where you can buy something today and sell it for more in a week, a month, a year, a decade, 50 years. I think there are things that'll be worth more in 50 years, but it's not the vast majority of things. It's the top 1% of the hobby, I think. You got to be careful. So do what's right for you and do what you enjoy. When it comes to Pokemon, when it comes to traditional investments, consult with professionals if you want to get advice in either. That's it. I will catch you all later.